The fiscal policy supporting the budget for the financial year 2022-23 and also the medium term is designed to accelerate economic recovery for improved livelihood for Kenyans. Mr. Speaker, as mentioned earlier, one of the objectives of our economic recovery program is to reduce the debt vulnerabilities by pursuing a revenue-driven fiscal consolidation. In this regard, the government has developed a draft national tax policy to guide tax administration that will soon be shared with stakeholders and peer review institutions for input. Further, the government is developing a medium-term revenue strategy to boost tax revenues, improve the tax system, and link taxation to our development needs over the medium term. Mr. Speaker, in addition, the government will continue to rationalize tax expenditures and retain those whose intention is to promote investment and ensure sustainability and value for money from our resources. In the tax expenditure report 2021, we noted a significant decline in the level of tax expenditure from 5.17% of GDP in 2017 to 2.96% as a percentage of GDP in 2020. We shall continue to review the existing tax expenditure in order to boost the tax revenue. Mr. Speaker, we project total revenue collection, including appropriation in aid and grants for the financial year 2022-2023 budget, to be Kenya shilling 2.4 trillion, equivalent to 17.5% of GDP. Of these, ordinary revenue is projected at Kenya shilling 2.14 trillion, equivalent to 15.3% of GDP. On the other hand, Mr. Speaker, total expenditure in the financial year 2022-2023 is projected at Kenya shilling 3.3 trillion, equivalent to 23.9% of GDP. Recurrent expenditure will amount to Kenya shilling 2.2 trillion, while development expenditure, including allocation to foreign finance projects, contingency fund, and conditional transfers to county government, is Kenya shilling 715.5 billion. The funding is expected to accelerate completion of ongoing infrastructure projects. The equitable share to counties is projected at Kenya shilling 370 billion. Mr. Speaker, given the projected revenues and grants against the projected expenditure, the fiscal deficit is projected to decline to Kenya shilling 862.5 billion, equivalent to 6.2% of GDP in the financial year 2022-23, from Kenya shilling 1 trillion 24 billion, equivalent to 8.1% of GDP in the financial year 2021-2022. The fiscal deficit will be financed through net external financing of Kenya shilling 280 billion, equivalent to 2% of GDP, and net domestic financing of Kenya shilling 581 billion, equivalent to 4.2% of GDP. Mr. Speaker, our medium-term fiscal consolidation policy targets to progressively reduce the level of fiscal deficit from Kenya shilling 862 billion, equivalent 6.2% of GDP in the financial year 2022-23, to Kenya shilling 634.1 billion, equivalent 3.2% of GDP in the financial year 2025-26. Mr. Speaker, Kenya has implemented reforms in public debt management to strengthen debt transparency and accountability. The depth of coverage and disclosures on public debt information has been enhanced in line with the best practices. A broad range of information on public debt is readily available to the general public on the National Treasury website, while an investor relations unit within the Public Debt Management Office facilitates investor, lender, and public engagements on public debt issues. Mr. Speaker, Kenya's debt carrying capacity is rated moderate, and the overall public debt is sustainable. We have initiated implementation of a set of measures to lower cost and risk in the public debt portfolio. These measures include cancellation of some non-disbursing external loans, rearrangements of syndicated external loans, and increasing the issuance of treasury bonds to lengthen the maturity structure and improve debt sustainability indicators. The preferred debt financing are highly concessional loans offered at below market interest rates with long repayment period. Recourse to commercial borrowing has been maintained at minimum levels. Mr. Speaker, the current legal numerical public debt ceiling has constrained public funding of projects while at the same time failing to consider the effects of external shocks on the economy. In this regard, we propose to replace the debt ceiling with a debt anchor and set it at 55% of debt to GDP in present value terms. This is in line with internationally accepted conventional practice. Further, we provided a requirement that the Cabinet Secretary National Treasury reports to Parliament whenever the debt level swings beyond the threshold with time-bound remedial actions. This approach ensures that debt remains within sustainable levels and entrenches accountability and transparency in public debt management. I have forwarded to this August House the necessary changes to the PFM marks to align ourselves with this desired position and request that the House consider it favorably.